What if Opendoor actually wins? Not just survives, but thrives. What if this company, currently trading at just around $2 per share, becomes the Amazon of real estate? The dominant player in buying and selling homes, not 5 years from now, but over the next decade? It's a bold question. But today, I want to take a break from short-term noise and ask something very few investors are asking right now. What if Opendoor actually pulls it off? Let's be honest. The narrative around Opendoor is rough. It's often dismissed as just another busted SPAC or a meme stock that retail traders can pump and dump. But underneath that broken narrative is something that still matters, something that could still change the real estate game forever. So in this video, we're not going to focus on earnings next week or price swings this Friday. We're going to zoom out and look ahead. Because at these levels, the question isn't just will Opendoor survive next quarter? It's, what if they win the whole game? Let's start with the problem they're trying to solve. Real estate is still one of the most outdated, high-friction industries in America. Think about it. Buying or selling a home still involves weeks or months of showings, inspections, agent fees, negotiation delays, financing chaos, and paperwork. In many cases, it's an extremely emotional and overwhelming process. It's expensive. It's slow. And it's still mostly offline. Opendoor is trying to flip that. Their model is simple in theory: use technology and data to buy and sell homes more efficiently than traditional methods. Make instant offers. Close fast. Reduce the friction, and in doing so, create a better experience for the seller, the buyer, and the entire transaction ecosystem. Now, are they the first company to try this? No. Zillow tried and failed. Redfin has struggled. But Opendoor has remained committed. Even when times got tough, they didn't abandon their model, they refined it. They scaled back, cut costs, focused on their best-performing markets, and leaned into what works. That's important, because it shows discipline. And in a disruptive space like this, survival isn't about being flashy. It's about adapting until you find the model that sticks. Now here's where it gets interesting from an investing perspective. Opendoor is trading at a market cap of under $1.5 billion. That's tiny when you consider the size of the market they're going after. The US residential real estate market alone is worth over $2 trillion annually in transaction volume. If Opendoor can even capture 1% of that, consistently and profitably, we're talking about a multi-billion-dollar revenue stream. But forget percentages for a moment. Let's look at Amazon in 2001. The company was bleeding cash. Analysts thought e-commerce was a fad. But some investors saw the long-term vision. They saw the infrastructure being built, the data advantage forming, and the eventual dominance. Or think about Tesla in 2011. Still barely making cars, but building something bigger, an ecosystem, a brand, and a moat that Wall Street couldn't understand at the time. Opendoor, at this moment, could be in that same zone of disbelief. It's not producing huge profits yet, but it's building the platform. It's laying the groundwork for a fully integrated, tech-first real estate experience, something that could scale dramatically over time. Let's talk about how they win. For Opendoor to succeed, they need to do 3 things. Improve their unit economics. They're already making progress here. Gross margins are improving. Losses are narrowing. They're learning which markets work and which don't. Grow their service stack. It's not just about flipping homes. Opendoor is building adjacent services: mortgages, title, escrow, home repairs. If they can own more of the transaction, they increase both revenue and stickiness. Leverage data and AI. They're already using proprietary algorithms to price homes in real time. If they can continue to outpace agents and institutions in valuation accuracy, that becomes a serious competitive advantage. Add to that the broader macro tailwinds, a stabilizing housing market, eventual easing of mortgage rates, and younger buyers who are more comfortable with online-first experiences. There's also a psychological shift happening. Younger generations are more willing to transact digitally. The same way people used to say, "I'll never buy clothes online," or "I'd never use a robot for financial advice," those same people are now shopping on Amazon and using robo-advisors. Buying and selling homes will evolve, too. And Opendoor is betting that it'll evolve in their direction. Now, what's the risk? The biggest one is execution. Opendoor has to prove they can scale this model without blowing up their balance sheet. They also have to compete with entrenched players, traditional agents, brokerages, and platforms like Zillow. But the flip side is, those players are not innovating at the same pace. Most agents are still using the same playbook they've been using for 15 years. Opendoor's tech-first model gives them agility, efficiency, and data that incumbents simply don't have. And here's the other bullish argument: they've already made it through the storm. Last year, the housing market froze. Mortgage rates skyrocketed. Affordability tanked. And yet, Opendoor didn't collapse. They adapted. They cut costs. They adjusted inventory. And now, heading into a period of stabilization, they're positioned leaner and more focused than ever. So here's the bottom line. Most people are treating Opendoor like a busted meme stock. But what if it's actually a misunderstood disruptor? What if all the chaos and restructuring was just them going through their Amazon in 2001 moment? At $2 a share, the market is pricing in failure. But if they win, if they figure this out, the upside is massive. Not 20% or 50%, but potentially 5x to 10x over the long term. It's a classic asymmetrical bet. High risk, yes, but high potential reward. And the best part? You don't have to believe they'll dominate 50% of the market. You just have to believe they'll survive, thrive, and take even a small but profitable slice of $1 trillion pie. So the next time someone brushes off Opendoor as just another meme stock, ask them this: what if they're wrong? What if Opendoor actually wins? Thanks for watching. Drop a comment below. Are you thinking long-term on Open, or are you just watching for the next short squeeze? If you got value out of this video, make sure to like, subscribe, and share it with someone who's overlooking this opportunity. See you in the next one.